big investments that I've made recently have been in Nvidia. Yeah, I've been in Nvidia.
How much of your portfolio is Nvidia?
Right now it's down to like about 40%. So it used to be like...
So like 40% in a single stock?
Yes. So it used to be even more. And that's because, so I've been holding Nvidia stock since 2016. So they've been...
Good for you.
Yeah. So
are you buying the dip as well when everything crashed with the tariffs, remember?
Yeah. So I didn't buy that one, but Nvidia has actually crashed by over 20 or 30% several times in the last maybe 18 months now.
So you track it and you buy?
So I track it and, buy or at least like slowly average more in. And then a little while ago, I sold about a third of my shares. Yeah,
Why?
I got married, so I paid for my wedding, I paid for my honeymoon, real life expenses. So, I had to adjust my portfolio accordingly. Yeah.
How's you hold? Can you?
Yep. So
give me the overview?
I've been talking about a stock called Palantir for about 3 years now. So I first started investing in Palantir in 2022 or 2023. I started buying it at about, I want to say like $11 a share. I sold it at around 25 a share. I sold about a third of my position. I ended up buying it back. I reevaluated my thesis. I actually made videos on both sides, made a video saying, hey, I don't like these few things about the stock. Then a couple people in the Palantir community pointed me towards like different things to look at. Decided I was wrong, came out with another video, bought back in at around maybe like $28, $32. And now I believe it's at like $135 a share.
Wow.
So it was another like...
How much of your portfolio is Palantir?
Yeah, another like probably 20, 25%. Okay. And so let me make a good distinction here. So I didn't buy it to become that, right? When I bought these stocks, they were 8, 10, maybe 12% of my portfolio. And because they grew, yeah. And so usually what I do is I buy and then I just hold for a long time because it can take a while for these companies to mature and then for the stock market to understand what these companies offer. So for example, whether we want to talk about Nvidia or Palantir, their earnings trailed, what I'm trying to say is it wasn't easy to hold this stock because for a long time, they were losing money on their research, right? They were unprofitable or nearly unprofitable. Nvidia was a gaming company first, transitioned to data centers. And that transition took a long time for them to become profitable in that segment and start growing in that segment. Meanwhile, they were declining in their gaming revenue, right? So it just looked like the business was going down. It's the same story with Palantir. They had a big government segment and then they were spinning up their commercial segment. And for a while, their government business was slowing down and their commercial business didn't make up the difference. So understanding the product is what got me in the stock before their earnings caught up to what they were actually doing.
What was your background?
Electrical engineering. So I'm not a finance guy. My background is I have a bachelor's in electrical engineering, a master's in basically data science, and then an unfinished PhD in AI.
You have perfect education for work.
Yeah. So I very lucky, So
40% Nvidia.
Yeah.
20.
About like 25% Palantir.
25% Palantir. What else?
The rest is honestly companies straight from the NASDAQ. A big believer in Google, big believer in Amazon.
So
and
individual stocks or?
So a big portion of my portfolio is the NASDAQ 100, the index itself. I hold another index called SPMO. That's the S&P Momentum Index. And so what's special about that one is it only picks from companies in the S&P 500, but it tracks them based on momentum. So the relative amount that they've gone up in the last, I believe, 4 quarters, so 12 months. So those two indexes make up a good chunk of my portfolio so that I'm a little bit diversified, but then individual stocks, and I usually pick from those same indexes. So Google, Microsoft, Amazon, Broadcom is a big stock that I cover.
Is selling ever part of your strategy apart from personal expenses?
Absolutely. So, no matter who you are, a stock can get like way overheated very fast. Sometimes, Palantir moved, for example, I think it was like, it's up like 80% this year. That's a little too hot to handle. So I don't really sell out of a stock completely, but I'll trim it over time, right? So Nvidia is a great example. Palantir is a great example. I might reduce my exposure from like 40% of my portfolio, which is way too much, down to something like 25. So
and reinvest in NASDAQ or?
Reinvest in the NASDAQ, yeah. So I try to always make my money work for me instead of work for my money. So typically, if I don't know what to do with it, I'll put it in the indexes, treat that like a cash position. And then what happens is because some of my shares in these indexes are more than a year old, I can withdraw them and only pay capital gains tax.
Yeah.
So that's what I use to fund my next investments.
Interesting.
Exactly.
So when you talk about, just want to understand your income proportions, does most of it come from YouTube now, or stocks are also like a primary?
Yeah. So about 10% of my income comes from YouTube, maybe a little more, 10, 15, something like that. The rest comes from investing.
So you can say investing is your full-time job, right?
Investing is definitely my full-time job. So
How much time does it take a week?
I treat it like a real job. So for me, I probably spend 40 hours a week researching. And so what I actually do is I try to monetize that research as many ways as I can. So the first and primary way is definitely my own investments. If you shut down my YouTube channel today, I would just be focused on investing for myself. Second way is sharing my research on YouTube, right? So that's my YouTube videos. Third way is I actually advise a couple of family offices, pretty small family offices, but same thing. It's just like the content on my YouTube channel, but they're just asking more specific questions about more specific companies, some public, some private. And again, it's all AI and semiconductor focused, so chip focused. And they're just really looking to understand how to protect their wealth in the event of a bubble, right? So,
what's your advice there?
Yeah. So, don't have crazy amounts of exposure in one or two publicly traded companies would be a good start.
Which is the opposite
of what I do, right? So I find that people who are like very, very wealthy, they're not really looking for, 2, 3, 5, 10x stocks, right? They're looking for safe bets that meet or outperform the market. And what they want to do is minimize their risk. Right. So it's a very different strategy for them. They're already diversified across a lot of different asset classes as well. So what they actually end up looking to me for when I get in contact with them is to stress test an existing thesis in a company they already have. Like, will Amazon continue powering roughly a third of the internet? Or when things move to AI, will the next big cloud service look very different from Amazon Web Services?
What do you think about that? That's a great thing to think about that.
So I do think that Amazon Web Services, Google Cloud, Microsoft Azure, they're putting themselves in a position to kind of have their cake and eat it too. They power a large portion of the traditional internet, and they're investing heavily in AI to power a big portion of the generative internet, right? So I think because they're able to spend the many, many billions of dollars to build up that infrastructure, they'll be very hard to disrupt no matter what. Because just like family offices, these are really like companies that are portfolios of technology, right? Google's not just a search engine. It's a cloud service provider. It's the Chrome browser. It's the Android operating system. It's Google DeepMind. There's all these pieces to their portfolio.
Yeah.
So when Google loses a little bit of market share in the search space, for example, which was like in the news lately, they dipped under 90% market share in search. They actually have a large portfolio of technologies, products, and services to fall back on and other ways to make that up.
So for an average investor like me who can't spend all my time investing and like researching, what would be the ideal portfolio if I want to win in this AI?
Yeah, so I'm
going to lose everything.
Sure. So I'm going to say something a little bit controversial here. So the typical advice, and by the way, I'm not a financial advisor, right? I'm not qualified to give financial advice.
Typical thing you say on YouTube, right?
Yep. And it's very true. So like, if you were to establish like a serious amount of money in an account today, you should go seek a professional and talk to them, right? But if I was in your shoes, what I would do is instead of building the traditional advice that you would get today is build a 60-40 portfolio, right? That's 60%
like bonds
stocks.
Is your age and the rest
Exactly.
Stocks.
And that proportion slides as you grow older, right? In my opinion, where you want to diversify is outside of stocks, right? So you want to hold some real estate. Maybe you want to hold some crypto or some precious metals or whatever, collectible, whatever you think is a good asset to hold, right? And inside stocks, what you want to do is decide how much risk you're willing to take. And that really depends on what kind of stocks you want to buy versus how much you should put in indexes. So for example, instead of a 60-40 stocks bonds portfolio, maybe it's a 60-40 indexes individual stocks portfolio, right? So when my friends ask me...
So no bonds.
So in my opinion, no bonds, right? That's certainly not mainstream advice, but what I would do is I would put money in the S&P 500 and the NASDAQ.
The proportion.
Yeah, so I would prefer the NASDAQ, but if you aren't so comfortable with like the big ups and downs, that's really S&P 500 is a great index. It's performed super well, long history and track record of great performance. A little more risky, but a little more rewarding over the long term would be the NASDAQ 100. Still very diversified, 100 tech companies across a wide variety of different technologies. You got your Nvidias, your Broadcoms, but you also have software companies, cybersecurity companies, really all sorts of different technologies. So I would do the NASDAQ. And then the rest, I like picking individual stocks from like the top and the middle of those indexes, because those indexes already have good criteria for a company to be in them. Mm-hmm. So all the individual stocks I hold, like there's no magic, right? They're at the top of the S&P 500. They're at the top of the NASDAQ. Yeah. And so what I really do is I try to find the losers in those indexes. And by losers, I just mean the historic underperformers. Not that they're bad companies, just that their growth in the stock market has underperformed the index. And I just try to avoid those. So there's a good saying, if you want to be a great gardener, it's not about planting the right plants. It's about stripping away all the things that stop those plants from growing. So what I try to do is, that's it. I'm just looking to, plant my flowers. Those are the individual stocks, and try to minimize my exposure to the things that stop them from growing.
So for a 35-year-old like me, what would be the percentage of those things that you mentioned? NASDAQ 100, S&P 500, and some individual stocks.
Yeah. So if you never want to think about the market again, you do it once and then you go away for 30 years and you hope that, you just want to retire.
You still want to do dollar cost averaging, right?
So that's what I would do. But, a lot of people automate that, for example. So $100 a month, $1,000 a month, whatever you feel appropriate, you're just investing it into this mix.
So what's the mix?
Yeah. So the mix would be, in my opinion, something like 25% S&P 500, maybe another 40% NASDAQ 100. So that's already 2/3 of your portfolio. Now you're safe and in the indexes, right? You can rest easy knowing you have 500 companies spread across your portfolio, right?
Yeah.
And then the other 35%, I would pick individual stocks. And the way I like to do it is I like to invest in things I know. So my channel is focused on sort of expanding people's knowledge about things so they feel comfortable holding those stocks when they dip 20, 30, 50%, which Nvidia does, Palantir does, Broadcom does, all these high rewarding stocks. They crash just as much as they go up, right?
So they have high volatility. It's so hard, especially if that's your single portfolio.
And whether you're a retail investor, an institution, a family office, whatever, your behavior and your psychology is 90% of your returns. I strongly believe that. There was a great study by Fidelity, and they said the top performers in their entire suite, Fidelity manages trillions and trillions of dollars in assets. Guess what they all had in common?
They were over 60 years old.
They were all dead. They were all dead.
See?
So they just couldn't touch their portfolio, right? So they let it ride. You know what I mean? They never sold, which means they never panicked.
Yeah.
So that's a good reminder that the best thing to do almost always in the stock market is nothing, right?
Wow.
So even though my channel's about stocks and updates and buy this and buy that, it's because a lot of new people funnel in. They find my channel. They have new money to allocate. They just found me for the first time. But the average viewer I find that I talk to, they only make 1 or 2 investment decisions per year. They'll rebalance maybe quarterly. They'll get into a new stock. They'll decide to sell just like I did because they have a real family expense. They'll watch one of my videos on a stock they were thinking about selling and decide to hold some of it, maybe only sell half what they thought. So it seems action-packed when you're making content about stocks every week. But it really is like, for the average viewer, supposed to be just a data point, another data point, another, and then they go about their life,